Welcome to today's episode called R. Foster Winans and the Wall Street Journal Scandal. And what if I told you that one of the biggest insider trading scandals in Wall Street in the 1980s, it wasn't orchestrated by some hedge fund titan or a corrupt CEO, but it was done by a charming, underpaid journalist for the Wall Street Journal who ruined his promising career and also sullied the reputation of the great Wall Street Journal, and all for just a few $1,000s. It was a sensational story of the time. And this is the story of R. Foster Winans, who was a rising star in the 1980s heyday. This is the era of greed is good. And what I love about this story is it's not just a story of financial crime. It's really a cautionary tale where you might find yourself wondering, would I have done the same? It's a cracking story. Enjoy. And just a quick reminder, while these shorter weekly episodes released every Wednesday are free for everyone, for just $1.99 a month you get access to our co-hosted hour-long episodes released on the first of every month, where Keith and I do an even deeper dive into an incredible business story. Some of these hour-long episodes are still free in our back catalogue, so you can get a taste of what to expect. Now, as well as getting access to these monthly co-hosted hour-long episodes, behind the paywall are additional bonus episodes, and over the coming months we'll be adding more bonus episodes for subscribers regularly. Some of these are two-parters, some are three-parters, and some are standalone episodes. Also, as a subscriber, you can listen to these weekly episodes ad-free, so you won't have to listen to me telling you about our great subscription offer. And it is a great offer. For just $1.99 a month you can subscribe via Apple subscriptions, Spotify subscriptions, or on Patreon using the link below, or go to patreon.com/Great Business Stories. So, born in 1948 in Philadelphia, Robert Foster Winans, he didn't set out to become a financial journalist. He was a former pre-med student, and he spent the 70s though bouncing between local newsrooms in Pennsylvania, New Jersey, Texas, and Washington State, and he built a reputation for lively writing. And then in 1981 he got his big chance when he got an opportunity with the Dow Jones News Service. Although he confessed himself, he said, "I didn't know the difference between a stock and a bond." Now, he joined as a lowly paid copy reader, but he gained a reputation for being witty, for being charming, but more crucially, he had this knack for pattern recognition. That's for spotting movements in stock that seemed to have no clear explanation. And it was this ability to piece together kind of seemingly unrelated bits of information, and it caught the attention of the Wall Street Journal editors. And in 1982 they gave him a spot at the Wall Street Journal's prestigious Heard on the Street column. Now, the Heard column, as it was known as, it had a lot of power. Like, stocks mentioned favourably would rise about 6% on average, while those criticised fell by just as much. And inside the journal, writing for the Herd was treated as a pretty big responsibility, and on his first day, Winans was told in no uncertain terms that leaking or trading on column information would be grounds for immediate dismissal. The policy, although it wasn't actually written down, was blunt. Such material must never be disclosed to anyone outside the company, including friends and relatives. And the journalists had to be very careful and subtle, because even calling companies for comment could inadvertently alert them and move markets. Sources who were in contact with the Wall Street Journal and were used by the Wall Street Journal journalists would often try to coax advance tips, and stocks sometimes began shifting before the column even hit the page. As Dan Dorfman, a Herd veteran, observed, he said, "There are always going to be leaks. There's no way to prevent them." Winans himself, he approached his work like an investigator. He read between the lines. Like, if he heard a tense CFO on an earnings call, for him that was a story angle. He cultivated stories amongst analysts and executives, pressing them for even the smallest insights that might move a stock and get him a good story. And his instincts were sharp, and his work made an impact. So in public, Foster Winans, he was a rising star, but in private he was struggling, because at 35 years of age, and despite his influential byline, he earned only $30,000 a year. And Manhattan, as is now, was back then very expensive, and he lived in this slummy block, as he called it, on 14th Street, and he complained about being underpaid, and personal stresses weighed even heavier because his longtime partner, David Carpenter, he was battling a large debt from leukemia treatment. And then you have the Wall Street Journal culture. It compounded these frustrations because recognition wasn't really given an awful lot. You weren't praised a whole lot back in the offices. In short, Winans wanted more validation and more money. And I suppose his job led to even more frustration because a large part of his job was meeting daily with rich brokers and financiers at exclusive restaurants, riding in limousines, and he felt real disparity. He acutely felt the disparity between his talents and earnings when compared to the talents and earnings of these people he met daily. And to put this into context, the early to mid-80s was a bull market, a time of soaring stock prices, deregulation, big money. The period is probably best encapsulated in Oliver Stone's brilliant film Wall Street, where Michael Douglas uttered the now infamous lines, "Greed is good." And interestingly, that line was actually credited in real life to Ivan Boesky, one of the most successful arbitrage traders at that time in the mid-80s, who would eventually get caught up in a huge insider trading scandal in 1986. And the actual quote that Boesky said, it was in a commencement speech at Berkeley Business School in 1986, and it was, "I think greed is healthy. You can be greedy and still feel good about yourself." So it was in this atmosphere where Winans could see that all these people were profiting off the market while he was being paid peanuts. He didn't feel like he was getting any real praise or recognition from his bosses. And at the same time, he had all of this insider knowledge. So it didn't take long before he gave in to temptation. In January 1983, he secretly purchased 400 shares of American Surgery Centers stock under Carpenter's name, days before a favourable herd column ran. And their $1,800 investment netted $4,600 in profit. And emboldened, they tried again, making another $500. To avoid detection, Winans phoned in the trades, pretending to be Carpenter. Now, the operation, it was crude, small scale, and it went unnoticed. But the real turning point came with a seemingly innocent introduction. In early 1983, while he was researching American surgery centres, Winans was introduced to Peter Brandt. He was this star broker at Kidder Peabody. And Brandt, then in his early 30s, he was making about $2 million a year. Now, he was actually born Peter Bornstein, but in 1976 he legally changed his last name because he wanted to assimilate into Wall Street's WASP-dominated culture, and to him that meant shedding any trace of his ethnic background. Now, their initial meeting between Brandt and Winans, it was ostensibly professional, where Winans was going to do a potential profile piece on Brandt, but over the next few weeks they met regularly, and I got the feeling that from very early on they both knew that they could use each other. Brandt introduced Winans to the exclusive racket club, followed by dinners at the 21 Club. He spoke freely about his wealth, his yacht, his parties, his sprawling real estate, and by mid-1983 Brandt had become one of Winans' go-to sources. And Brandt's brash confidence, I suppose, his access to wealth, this played directly into Winans' own growing frustrations and feelings of inadequacy. And Brandt flattered him openly. Learning that Winans made only about $30,000 a year, Brandt exclaimed at the injustice, and I quote, "Isn't it terrible? Only $30,000 a year with all your skill and talent." So it was the sort of validation that Winans longed for, and delivered by a man who had everything that he didn't. The pivotal moment then came on October 12th, 1983. They were meeting again at the racket club, and the two men exchanged pleasantries before Brandt subtly shifted conversations to Winans' own financial struggles, and then lowering his voice, he said, "You know, if I knew beforehand what was going to be in your column, we could make a lot of money." According to Winans, the words hung in the air. Winans said that Brandt's tone was light, almost joking, but he knew the meaning was deadly serious, and crucially, Winans didn't say no to Brandt's remark stroke proposal. And, why would he say no? The idea of doing this very kind of thing with Brandt had crossed his mind. I believe it was probably on Brandt's and Winans' minds pretty soon after they first met. Like, everything up to now had been building to this moment, to this proposal from Brandt. And remember, Winans and his partner, Carpenter, had already used his insider knowledge to make some money. So this wasn't too big a jump for Winans, even though he knew it was wrong. Or in his own words, as he said later in court, I knew it was wrong. I knew it was unethical. So there's no grey area here. He knew he was stepping over the line. But the offer tapped straight into his resentment, his needs, and the atmosphere of greed that really permeated Wall Street at the time. You can even see how he'd rationalise this. Everyone else is cashing in. This isn't such a big deal. It's just a little side hustle. No one's getting hurt here. By October 16th, 1983, the conspiracy was sealed because Brandt invited Winans to play golf at Meadowbrook Club. This is a plush private course on Long Island. I looked it up. It's pretty nice and expensive. It costs about $100,000 in initiation fees and then $1,500 a month. And there, on the manicured greens, they finalised their deal. And it was simple. Winans would leak advance information about the herd on the street columns, what stocks would be mentioned, what the tone would be, and when the articles would run. Brandt would use this information to trade ahead of publication, buying stocks about to get favourable coverage or shorting those that were slated for criticism. Both men agreed on one critical point. I love this. Winans' journalistic work must remain unsullied. Yes, he would not slant his coverage to guarantee Brandt's trades. The columns would remain genuine, so allowing both men to pretend, if only to themselves, I suppose, that they were not fully corrupt. How honourable of them. And Winans made clear as well that last-minute editorial changes could derail their plans. Brandt accepted that risk. In return, Brandt insisted that the mechanics of the trades, they'd be all his responsibility, and Winans was fine with that. He wanted none of the details. In fact, he asked Brandt pointedly not to tell him how much money was being made. You see, Winans didn't want to get involved in the trades at all. He didn't want a percentage of what was being made off the trades. He just wanted to be paid for the leaks. And so he asked for an upfront payment of $15,000. Brandt agreed without hesitation. They also agreed that the cheque should not be made out to Winans directly. Instead, it would be written to David Carpenter, Winans' longtime partner. Now, by introducing Carpenter into the arrangement, Winans subtly outed himself to Brandt as a gay man, which would have been a big thing back in the 80s, but Brandt just accepted it without pause. Carpenter would handle some of the logistics, helping to manage communications and payments. And Brandt, for his part, he brought in another player as well into the fold, a guy called Ken Fellis. He was a younger colleague at Kidder Peabody, and Fellis would help execute the trades, manage logistics, and share in the profits. And just a quick reminder, while these shorter weekly episodes released every Wednesday are free for everyone, for just $1.99 a month, you get access to our co-hosted hour-long episodes released on the first of every month, where Keith and I do an even deeper dive into an incredible business story. Some of these hour-long episodes are still free in our back catalogue, so you can get a taste of what to expect. Now, as well as getting access to these monthly co-hosted hour-long episodes, behind the paywall are additional bonus episodes. And over the coming months, we'll be adding more bonus episodes for subscribers regularly. Some of these are two-parters, some are three-parters, and some are standalone episodes. Also, as a subscriber, you can listen to these weekly episodes ad-free, so you won't have to listen to me telling you about our great subscription offer. And it is a great offer. For just $1.99 a month, you can subscribe via Apple subscriptions, Spotify subscriptions, or on Patreon using the link below, or go to patreon.com/Great Business Stories. Now, the plan moved from theory to practice on October 17, 1983, and this is when Winans leaked to Brandt that the herd column for Tuesday, it was going to be a positive column on oil drilling stocks, but that story was pulled when a more newsworthy article came up, and this resulted in a $46,000 loss on their very first trade. However, Winans' second leak, a day later, resulted in a profit of over $100,000, and thus began a near daily ritual, Winans passing along the next day column tips, Brandt and Fellis trading on the information. Now, early on, Brandt had brought in another conspirator into the scheme, a trusted client and a friend of his called David Clark, and this allowed them to spread the pattern and to minimise suspicion. Clark was this wealthy, well-connected attorney, but he was also an alcoholic, and by this stage he was under huge stress as he had been using his clients' funds to trade recklessly, and clients were starting to ask questions. Fellas didn't want him on board. Fellas warned Brandt, saying, "Clark's a pig, he'll get us caught." But Clark, as well as providing new accounts to spread the trades, was also providing money for the trades, and so Fellas relented. Brandt paid Winans another $15,000 to bring his total take by this stage up to $30,000. And throughout this time, Winans, he kept up appearances. His columns remained professional and balanced. There was no sudden puff pieces, no transparent hatchet jobs. I mean, to the journal editors, he looked like a diligent, ethical reporter. However, in Kidder Peabody, compliance officers began noticing troubling coincidences. Large trades in stocks shortly before Heard on the Street columns mentioned them, and linked accounts included Kent Fellas and David Clark. Now, they launched an internal inquiry, a very quiet one. Brandt and Fellas denied everything. They claimed ignorance of any connection to the Wall Street Journal, and they spun this flimsy story just about coincidences. Meanwhile, back in the Journal, Foster Winans, he was planning an exit because by early 1984 he applied for a position at Standard & Poor's. He wanted a quieter, better paid job. And so it might have all ended cleanly, except for the fact that the SEC was closing in. Because in 1984, the SEC picked up on the scent because trading records flagged by Kidder Peabody, they caught their attention. And the SEC began investigating the trading activity around Heard on the Street publication dates. On March the 1st, the SEC contacted Kidder Peabody, David Clark, and the Wall Street Journal itself. And that afternoon, Winans' editor summoned him into an executive office where, together with the Wall Street Journal's general counsel, they confronted Winans about the potential leaks. Winans denied any link to suspicious brokerage accounts. He denied receiving money or gifts. He denied everything. And the editor, trusting his reporters, that night, Carpenter contacted Brandt using a coded message. "The drapes are not hanging right." I love this. I mean, do they think they're in a John le Carre novel or something? Now, Winans drafted a memo outlining the SEC's questions and his false answers, and Carpenter went over to Brandt's apartment to deliver it. And when Brandt read the note, he was initially relieved. But when Carpenter revealed that the two checks for $30,000 had actually gone into a joint account shared with Winans, Brandt got a bit panicked because this supposed insulation between Winans and the money, it was a bit more porous than Brandt had realised. So the conspirators scrambled. They hatched plans for cover stories. They claimed that the payments were for decorating services by Carpenter, and they were portraying Brandt as simply this savvy broker who figured out upcoming journal stories through legitimate conversations that he had with Winans, because, it was known he met Winans regularly. Nothing was finalised, but the seeds of this, desperate defence were planted. Meanwhile, Winans continued lying, sticking to his denials in a formal internal journal interview on March the 2nd. Now, by March the 5th, the SEC was tightening its net, contacting Brandt directly. Brandt lied again, but he was panicking at this stage. He actually considered fleeing to Brazil, but that plan was abandoned. And despite their carefully laid plans and their continued denials, there was just too much coincidence when the trades were examined. Analysts flagged 27 instances where Brandt sold stocks 6 to 18 hours before negative Heard columns ran. Clark's accounts and trades, meanwhile, had a 92% correlation with Heard on the Street column. And in mid-March, the journal's executives began cooperating fully with regulators, and their editors travelled to Washington to testify. On March 21st, the conspirators held a last-ditch meeting at Trader Vic's in the Plaza Hotel, and Brandt laid out this story to maintain deniability, but Carpenter was drunk and agitated. He made veiled threats of exposure, tempers flared, trust disintegrated, and that night, driving home, Winans and Carpenter, they decided to come clean. They no longer believed that Brandt and Fellas would protect them. And so on March 29th, 1984, they confessed everything to the SEC. They gave detailed testimony implicating themselves, Brandt, Fellas, and Clark in the insider trading ring. And in doing so, Winans and Carpenter, they hoped that they would get some leniency. Now, meanwhile, under mounting pressure from Kidder Peabody's compliance officers, Peter Brandt cracked. and facing up to 15 years in prison, he pointed the finger squarely at David Clarke, shifting the blame, portraying himself as this unwitting participant rather than the actual architect. Now, interestingly, the legal terrain here, it was untested because Winans' columns were analysis. They weren't company secrets. I mean, could this even be considered insider trading? And so with no precedent, prosecutors turned to this misappropriation theory, arguing that Winans had stolen confidential information, not corporate data, but Dow Jones's intellectual property. And US Attorney General Rudolph Giuliani, and yeah, that Giuliani, it's kind of easy to forget that he was actually at one stage in his life a pretty effective and talented prosecutor. Anyway, he reframed the case as theft, not insider trading in the traditional sense. Now, defence lawyers pushed back, arguing that Winans wasn't a corporate insider. Meanwhile, the Wall Street Journal's position was kind of shaky. I mean, while they claimed warnings had been issued, there was no written policy until after the scheme was well underway. Prosecutors outlined the full scale. So what it was 46 trades, 27 companies targeted, 690,000 in profit, of which Winans got payments of 31,000. The other 1,000 came from a cheque that Brandt gave to Carpenter for a trip to London. Now, when I saw those figures, I thought both Brandt and Winans would have made a lot more from this. Like, when you think they made 100,000 from their very second trade, I thought their gains would have been at least a couple of million. As for Winans, while he didn't want a share of the trades, his payments are only 5% of what the others earned. Now, the prosecutor said that the conspirators had discussed paying Winans up to $25,000 per leak, but that never materialised. Ultimately, in June 1985, Winans was convicted on 59 counts and he was sentenced to 18 months in prison, later reduced to 9 months in appeal, and he was fined $5,000. And Brandt, despite orchestrating the whole scheme, he just received 8 months and a $10,000 fine. And Forbes scathingly called this leniency, they said, a slap for the architect of destruction. Fellas got probation, Carpenter too avoided prison. Now, Clarke's trial was separate and he was found guilty in 1987 but died 6 days before sentencing from alcohol-related complications. The scandal, of course, forced reforms across Wall Street and financial journalism. And today, at 76, Winans, he lives quietly in Pennsylvania, and in fairness to him, he forged a successful career as a ghostwriter after prison. As for Peter Brandt, I mean, he just disappeared after his release from jail. Like, vanished, never heard from again. Now, there are two things that I find really interesting about this story. The first is that financial stories move markets. That's why we see short sellers like the Hindenburg Group produce these damning reports into companies in the hope that they'll get news coverage and this moves the stock price. But financial journalists themselves have real power. They know exactly what news is coming out in the next few days or weeks, and oftentimes this is news that no one else is privy to. And that's leverage. They can profit from that. So the real surprise here isn't that Winans got caught, is that there haven't been more cases like this. And so despite the criticism that I believe has been unjustly loaded onto traditional media over the last 10 years, it's admirable that there haven't been other such cases, and it underlines the strong sense of ethic that exists in traditional journalism, and I think that has to be recognised. The second thing that I love about this story is that in the grand scheme of things, this, it isn't a big story in terms of the money involved, but it's a great story because it's the embodiment of the slippery slope. How a seemingly small ethical compromise, a meeting leads to another meeting, a dance of sorts that both Brandt and Winans are aware of where it's going to lead to. A simple arrangement to give your buddy the heads up, no big deal, but you know in your heart of hearts that it's wrong. You're going against your moral compass. And I do believe Winans did have a moral compass. I'm not too sure about Brandt. But I can see how easy it might happen. When you're doing a good job but you're being underpaid, you feel underappreciated. When you're meeting people every day who probably aren't as smart as you, yet they're making 100 times what you make. And while I'd like to think I wouldn't go down the road that Winans went, I can definitely see how it could happen. And that's what makes this a great business story. I hope you've enjoyed it as much as I have. And remember, if you have any comments, any corrections, or any story that you'd like us to cover, email us at info@gbspod.com. All the best, folks.